Hello, entrepreneurs. Joe DeCharis, CPA, coming to you live from downtown Flushing, New York, for another amazing episode of How to Win at Business. And if you're watching live, give me the hashtag live. Yes, where did all the money go? That's a good question. If you're watching a replay, give me a hashtag replay. Happy Saturday, everybody. I'd like to invite you to my June 15th workshop, where we are going to talk about finding you the money. You know, we start with bookkeeping because we got to count it. First, you got to count the money. You got to know where you stand. And then we start looking for it. We look for it in your expenses. We try to find creative ways to generate new revenue, maybe find a grant. But there's a lot of ways to skin a cat, and we're going to talk all about it on June 15th. So it's free. It's going to be amazing. Yes, you are here, Tim. You are live. Thank you for showing up. I hope your event ended well today. Sorry I couldn't make it back. I took a long nap this afternoon. Anyway, I want to talk about, well, it's not that I want to talk about it, but this is important. This is stuff that's going on right now. A lot of people are getting into crypto. You know, I've already invested $30 into it. And I think I'm probably down 10% or something. So I'm probably only at I got $27 in my crypto account. Anyway, the question that I've had, and it's been answered, was how is the IRS going to feel about crypto? You know, people making tons of money. There's got to be some kind of reporting mechanism. And the facts are coming out, folks. The facts are coming out. And it's scary. It's scary like everything else that goes on with the IRS. Their rules are murky. And to be honest with you, and it's even in this article, in the Forbes article, where Forbes points out that even stuff that's in the tax code, even the instructions are misleading. They don't really tell you the truth. It's confusing. It's complicated. And a lot of times, I think, especially for something like crypto, you know, it's a new thing. It's a new thing. And I got a feeling that sometimes they're making up the rules as they go along. And that's actually why they have tax court. Now, you don't want to wind up in tax court. You don't even want to wind up in an IRS audit. And this is what's happening. So Forbes basically validated what I've been telling people since this question came out. There is nothing on a tax return right now where you have to report crypto. All the IRS wants to know is, are you investing in crypto? It seems like a pretty simple question. But why would they put this here? Why would they put this here? I'll tell you why. Because they're vetting, they're auditing. They want to know what people are doing, and they want to know if you're going to lie about it. Okay, that's the truth. They want to know if you're one of those people that are trying to slip under the radar and not pay taxes by not reporting income. So and it even says it down here, I think I can put a link to the article in the chat if anybody wants to read it. But what they say here, and I believe it, is let's say you do invest in crypto and you answer no over here. Now, they're going to be, when there's a taxable event, and I'm going to explain what that means, you will get a 1099, just like if you sold a stock, just like when you get dividends from stocks, when you get interest from a bank, you're going to get a 1099 with what the reportable transaction amount was. Okay. So in 2020, you say no. And then in 2021, it turns out that you were in crypto. Well, guess what? You just got an audit flag. You just got an audit flag, because it even says in this article here somewhere that the IRS could use that as proof that you were trying to avoid income taxes. Basically, it's tax evasion. It's a little question. It seems innocent enough, but that's how people get into trouble. So what's the deal with crypto? What's the tax consequences of crypto? And in a nutshell, and this is how it is in most tax situations, is, did you have a financial gain? Did you have a transaction where you cashed it in, you actually got money, or you got goods and services, or maybe you even traded into a different cryptocurrency? All of those things could be considered taxable transactions. For instance, some cryptocurrencies come with like a debit card, I've heard. So you could go to the supermarket and actually pay. What you're doing is you're converting your crypto into cash. They call it fiat. Fiat is hard cash. So when you put the money in, you're establishing your cost basis. When you take the money out, there's got to be a calculation. How much did you pay for that part of the cryptocurrency? And if you paid less than what you took out, it's a profit. If it's less than what you put in, wait, let me say that again. If you lost money on it, it's a loss. It's just like selling a stock. The question becomes, what are they going to consider taxable transactions? And that's what they're trying to figure out right now. So if you're in Bitcoin or one of these other places and you cash in those Bitcoins for cash, that's a taxable transaction. You're going to get a 1099 at the end of the year, and you have to report it. That's simple. So the solution here, I offered a simple solution to the complicated, what they say is a complicated tax issue. It's really not that complicated, folks. If you think about it, it's like you're putting money in a piggy bank, and it's there. It could be growing. It could be growing. It could be doubling, tripling, and you don't pay any tax on it. Just like if you had a stock that was going up and going up and going up, you will pay tax on it when you cash that in. To me, that's pretty simple. Now, another thing is, what you got to be careful of, they might consider cashing it in when you go from Bitcoin to a different crypto. So I'm not an expert on crypto, so I'm not sure exactly how the transactions work, but I believe there's probably some kind of exchange where you could just exchange cryptos. Those would be taxable transactions. That's not good. That's not good. It's like what the IRS is saying is, hey, you had this asset over here. It's ABC company. And now you just took the stock in ABC company and you change it into XYZ. That's a taxable transaction. You took one asset and you converted it into another, if that makes sense. So that's my story tonight, folks. I'm sticking with it. Any questions, please post them in the comment area. If you want to connect with me, go to timewithjoe.com. I love talking about business. I love solving problems, and I love helping people find money. And actually keeping it from the IRS. That's one of my favorite hobbies. So God bless. Thank you. I will see you again shortly.